Welcome to Subramani. If you have invested in the equity markets, chances are over the last few weeks, your portfolio has gone a little south, if not a lot of south, right? What do you do in such circumstances? Where do you turn around and say, oh, nothing happened? Are you able to look at your portfolio and pretend, oh, ये तो कुछ भी नहीं है, market has gone down, but so what? It will come back, and therefore I should continue to do my SIP. Well, that is what the textbook says, right? Continue to do your SIP. Now, the problem is not for people who have invested in mutual funds, because if you're, let's say you're invested in an index fund, the index will go down, index will come up, because the index by definition is made up of many items. So out of which 30 in case of Sensex, 50 in case of Nifty, some will go up, some will go down. So even if the index were to go down with the economy, it is likely to come up with the economy. So you're not really too much worried, especially if you have a long-term view about your portfolio. The problem is most of us are not invested in the index. We are invested in some shares, some mutual funds, and maybe the index, maybe an international index, right? Maybe you're invested like this. I mean, I am invested like this. So largely equity, but I also have mutual funds, and I also have indices, which includes the foreign index, right? So now what do? Can I invest in the foreign index? Answer is no. Is that dipping? Yes, that's dipping. Can I average more? I can't. Now take my equity portfolio. The portions of my equity portfolio which are pharma have not dipped so much. They never went up perhaps, so they didn't dip so much. Metals have definitely dipped. Oil is steady. Metals, banking has remained, has dipped long ago and remained there for a long period of time. What do you do in such circumstances? Yes, of course, it is easy to say, oh, bite the bullet and continue buying. Second is to say, okay, let me not buy, but let me not sell in panic. Let me wait. I have a long-term view anyway. Third, you see your share prices falling every day. You see a company announces good results, the share prices go up, but it comes below the previous low, right? Or the share price was 390 or 400, it goes to 440, then comes back to 395 or 400, 401, which is lower than the previous low, right? So then you wonder, I wish I had sold when the results were announced. So should you sell when good results are announced and buy it back? That can be one strategy which works. Or you say, it doesn't matter. I know it's a good company, good results, bad results will keep coming and going. So anyway, let me be invested throughout. That's one more thing which you can do. If you ask a mutual fund owner, mutual fund distributor or fund manager, they will say, keep buying the dips. Or just let your SIP continue. If you're doing a 10,000 rupee SIP, top it up with 50,000 and the market falls 10% or 20% or whatever. If you have money in some other debt schemes, remove from there and put it into equity market. These are difficult times, first of all. Second, understand that you have been fed with complete nonsense saying that the bear markets are short and brutish, but it will recover very quickly. May or may not recover. We don't know what will happen. Every fall is not a bear market, and every time the market falls, it need not come back very quickly. So let's say the market was at 62,000, the Sensex. It comes down to 52,000. What do? Do you say, okay, 52,000 was my stop loss, I'll sell everything and get out because you had a 20% stop loss? Or do you say, okay, it's come back to 53, 54, let me sell a bit and wait for it to go down to 52, then I buy more? You can't completely depend on the index, especially if you're not invested only in the index. This is something which you have to understand. So if you bought a metal stock and the metal stock you've sold at a good price, let's say you sold Hindalco at 650, then it came down to 570, 580. Is the time to pick up the share, or to say, no, metal, I bought it at 150, I've sold it at 650, that's a fantastic thing, I will wait for it to go back to 150. Do you have the ability to do that? I've sold sugar, I've sold metals, I've sold some part of the oil, I'm holding on to some part of the oil, right? All these things keep happening. These are difficult times. understand that you need money for very long, after a very long term, which means for 10 years you're not going to look at it. It's a great time to be in equities. However, if you don't have such a long view, if you have a 2-year view or a 3-year view, taking money out of the market, especially in those in which you are in green, and keeping it in cash is not a bad strategy. Because people tell you cannot time the market. Yes, don't try timing the market with 100% of your portfolio, but with 10-20% of your portfolio you can try timing the market. So the shares which I have sold at high prices, I've sold Tata Steel, Vedanta, Hindalco at high prices, right? So I am very, very comfortably placed to cover them. So why not? So right, so some of that I'll cover. I have no clue when I'll cover. I'm not at all impressed with AMCs. All the AMC shares are falling, I think, simply because the Franklin Templeton AMC is available at a PE of 8 in US. So is Sun Life. So the question is, if those are available at those prices, why should we pay such high prices for our AMCs? But having said that, remember, the parent company of most of the companies, Colgate, Lever, Nestle, whatever you name, are available at a much lower PE in their parent countries than in India. So don't just take some one example and say, therefore this will work and therefore this won't work for me. If you are in the index, continue to average. If you are in a well managed equity portfolio and you're very clear that you don't want to look at it for 10 years, let me repeat, 10 years, not 2 years, 3 years, then continue your SIP. If you're not very confident of a 10-year view and you think it's a 1-year view or a 2-year view, you can pause your SIP. There is nothing wrong with pausing your SIP. Keep some cash. When the market goes further down, you can buy more. So understand that various strategies are available. There is no one strategy which works all the time. Don't listen to one person partially and do it. Have a good advisor with whom you can have a proper discussion. If you don't have that, you will listen to many people, a lot of noise in the market. Don't believe that recovery will be quick. Believe that a recovery will be long. A recovery, suppose there is a market goes down and it recovers after 2 years. Will you have the patience to stay? Please understand, market always recovers. Whether it was a great recession 2008 or 2000.com boom, every time you feel, oh, this is the end of the market. Not true. Market goes down, market comes up. That is true. The question is not what the market will do. Market will go down, market will come up. Some industries will go down, some industries will come up. The same industries which are down will be bought by fund managers who are contrarian, right? So that will also happen. So all these things will happen. You will hear all these things. Please hear all this, listen to all of them, understand it, assimilate it, and then do what you are comfortable doing. Because if you do something against your own nature, chances are you will not stick to it and you will panic afterwards. If you want to panic, panic first. Panic at the earliest. Don't wait to panic. Don't wait after the shares have fallen down a bit and say, I'm still in profit. No, that's not the reason to sell. You did not buy to just be in profits. You bought to make a good amount of money. Understand what strategy works for you. See all the strategies and do what you like best and what works for you. Thank you.